Hello, everyone, and welcome. Thank you all for joining us during the Lytham Partners Spring 2022 Investor Conference. My name is Robert Breza, Vice President of Lytham Partners. During this presentation, we welcome CEO Richard Baker from TAAL, ticker symbol TAAL on the CSE and TAALF on the OTC. Today, I've asked the company to briefly run through a slide presentation, and then we'll engage in a fireside chat, like a Q&A session. Before we begin, for those not familiar, Lytham Partners is one of the country's leading investor relations firms with more than 2 decades of corporate access experience. We've built one of the industry's most diverse and effective platforms for connecting small cap companies with high quality focused institutional investors. While creating a framework of best practices in all the investor relations, today's presentation is hopefully another example of how we can bring value to multiple constituencies. Before I begin, one final item, I want to remind everyone that TAAL is available for one-on-one meetings later this week. If you've not already signed up, please send me an email at Breza, B-R-E-Z-A, at Lytham Partners, L-Y-T-H-A-M, partners.com, or visit the website, lythampartners.com/virtual, and click on the one-on-one meeting request button. With that said, let me turn the presentation over to Richard Baker, CEO of TAAL. Please go ahead.
Hi, Rob. Thank you so much for this opportunity today. It's a pleasure to see you and really delighted to have a chance to share with your investor community. I will just set up my screen here, so one moment. Delighted to meet everybody, and I'm actually the new CEO for TAAL. I'm delighted to say I took over on the 1st of January 2022. And for those of you that are not familiar with TAAL, we're a Toronto-based CSE-listed blockchain company, and we refer to ourselves as a blockchain transaction processor. So we're a platform operator. And I firstly, I guess we'll start with myself a little bit. I'm a technology entrepreneur. My career has spanned firstly working in the telecommunications industry in the early 90s. I worked for Nortel Networks for about 10 years. Building optical infrastructure, voice networks around the world. And so feel that this brings itself to the new world that we're here with, building on blockchain technologies. I also had the pleasure of working in building a financial services company out of Singapore, London, and the US, and we were a futures exchange trading industrial commodities. And more recently, I had the joy of building a startup in big data, so distributed databases and analytics. And all of these experiences converge in TAAL. Blockchain is the next incarnation of infrastructure for data. And ultimately, it's being built to be an economic utility and bring utility to the modern internet. And we'll get into that a little bit as we chat today. 2021, firstly, was a really transformational year for the company. We had a series, or every quarter, we had successive growth. We are shortly due to announce our final audited 2021 results, but the revenue range that we've given guidance on remains, 33.6 Canadian dollars to 34.1 million, and some really big wins over the year. And I'd love to share some of those with you as we step through this today. So some of that, firstly, is we have really 2 major business units. One of those we refer to as the infrastructure business unit, and that is our mining operations. And we saw successive growth in blocks achieved, and therefore subsidy rewards or tokens won, if you like, for the blocks that we won on the network. But equally, 2021 was a really powerful year for transaction growth, and we processed over 56 million transactions. And that's incremental data that is being built into the blockchain. So we're a data processor into the blockchain, and we also can monetize those transactions. And so that was a new commercial phase for the business. We, late in 2021, acquired a 60,000 square foot facility in Canada, in New Brunswick. And this is poised ultimately for us to build out during this year to bring additional ASICs into our operations and add some incremental growth over this year and into next year. And so we're expanding the mining fleet. We're expanding ultimately our total hash power. Ultimately, along the way, we really brought our second business unit to the market in 2021, and that is our software services business unit. And that places us very strongly with the combination of the two to be a blockchain platform service provider moving forward. And parts of the components there within that software business units are TAAL Orchestrator, which is a mining management and pool software platform, something called What's on Chain, which is actually an industry-leading block transaction search engine. It's an explorer tool. So you can almost think of it a little bit like Google search in the way that you want to interrogate the underlying blockchain. I'm really super excited that we are taking a big step to launch the second generation of TAAL Console. And this is our customer service portal where customers can sign in, ultimately send transactions to the blockchain, get analytics, and start to also sign up to and subscribe to incremental services with TAAL. And an acquisition we made about 18 months ago was a token protocol called STAS, and this is a layer 1 token solution, and we started to see the adoption of that in 2021. So a really strong year for us. I touch a little bit more on the acquisition of the facilities in Canada. I think globally we have to just acknowledge that mining data centers have become hot property globally. There's been obviously seismic change in the mining market over 2021, firstly with a lot of shutdown of operations in China. Hot on the heels of that was a tightening in Kazakhstan with almost now 50 mining operators being squeezed out of the market in Kazakhstan. And we've seen obviously 2021 be an era where the US and Canada has been a beneficiary of some of those big operators moving towards the United States and Canada. So we were delighted to acquire this facility. And as we now gear up to bring that online, we expect that facility to be powering up something in the order of 15,000 ASIC machines as we step into early 2023. And it will add over 1.4 exahash in capacity to our network, which will take us well north of 2 exahash as we end the 2022 and step into Q1 2023. Blockchain means many things to many people. For those that, again, are not necessarily familiar with TAAL, we focus on the Bitcoin protocol. This is also referred to as the SHA-256 protocol. And there are 3 variants of that protocol. It started life now 13 years ago as the Bitcoin protocol, which generated the BTC coin. It evolved in 2015 to become Bitcoin Cash, so BCH, and subsequently it became BSV, Bitcoin Satoshi Vision. BSV is actually very synergistic with Bitcoin, and for keeping this straightforward as a blockchain, BTC SHA-256 blockchain has some technical limits, particularly the block size. It's capped at 1 megabit, whereas the development of BSV was to think about unbounded scaling. And the change in that fork led to a development that actually today has already seen huge acceleration in block size. That means greater transaction efficiency. It also means greater energy efficiency in the way that you run your network. So we mine SHA-256 protocols, and we predominantly spend our time on the BSV protocol. And why did I need to cover that? Well, I think there's a lot of misconceptions in the current mining market. A lot of the hashing fleets today are pointed to the BTC network when they're mining Bitcoin. But if you look at my bar chart here, really there is very little difference in economic return or yield when you're mining across those 3 particular tokens or protocols. When you look at it on a unit measure of profitability per 100 petahash, actually we've seen through the way that the algorithm works, and particularly the difficulty rate, now there is very, very little difference in the return on your yield. And this, to me, I think is a big point of confusion in the way that assets are allocated and the way investors invest in fleets. And it's something I'm keen to make sure that we unpick and help investors understand that today, your economic return ultimately can be balanced if you can economically switch between these networks, and TAAL does that. We have the ability to switch in these networks every 30 seconds based on the best return from the economic differentiation that we see in the way the difficulty rate works. But more importantly, I think it's important to understand that we are facing now the next significant halving event in somewhere between March and May 2024 on the Bitcoin network. And that means there's going to be a greater pressure on what comes beyond block subsidy. And for us, that's all about network transaction fees and service fees coming from value-added services that run on the blockchain network. And I'm again delighted to say that over the 2021 to 22 Q1 period, we've been incrementing block sizes on the BSV network. So today, our block size is 4 gigabytes in size, and we are frequently seeing in excess of 3.8 gigabyte size transactions coming into the network. And these generate very sizable fees. We're getting the subsidy fee, but we're also seeing effectively the transaction fee. And this is the return on that utility that others can't generate. We can monetize through the transaction fee to get a greater return on the ASIC machines that we're running under management. Again, I think we take a different lens on this when we start to compare Bitcoin Core with the BSV blockchain. And this chart is showing you 3 really important characteristics of the differentiation on those networks. You've got the proof of work hash rate taking a comparison on energy input. So firstly, the BSV protocol is already 98% more efficient than the BTC protocol. And that's a byproduct of the way the difficulty rate works, but more importantly, that continuing commitment to scaling the block sizes. As a consequence, the output on transactions is greater. And as a consequence, it means we ultimately are increasing the utility of the network and getting a greater return on those machines that we're running. And in turn, that has an impact on energy consumption. So our return on kilowatt hours or megawatt hours is actually much greater than anything we would ever do with a BTC network. And all of this comes together when we start to really focus in on the journey ahead. You know, again, when you read the original Bitcoin white paper from 2008, you know, we know that the protocol is effectively halving every 210,000 blocks, roughly every 4 years. And so the next halving event in 2024 is quite significant. And we're on a tail into 2032 where the subsidy fee is gone really from the network, from the BTC network. So it is more important now than ever that there are strategies in place to monetize transactions that run on these networks. And again, for the Bitcoin Satoshi Vision protocol with unbounded size on blocks and a algorithm on the mining side that is ultimately updating every last block mined versus the BTC, which has got a 2-week lag, it is just a network that will scale and be able to process those transactions. Excuse me. So I guess why that matters also at an economic level is when enterprises are moving to blockchain, they evaluate the robustness of the network, they evaluate ultimately the scalability and the processing capability of the network, and then they significantly evaluate unit economics. And I think today, when you look at the per transaction fee on the Bitcoin SV network, and we're in the 1,000th of a cent range per transaction versus Bitcoin hovering between $1.80 and $2.20 on average, and Ethereum between $18 and at its peak, $24. And so the combination of transaction power, scalability, unit economics, robustness, this is what makes a powerful blockchain infrastructure. So who are the customers we deal with? We focused on 4 major industries, and those are healthcare, supply chain, finance, and gaming, particularly kind of e-gaming. So in healthcare, we have clients like EHR Data. And I think, you know, the core proposition of a blockchain distributed ledger is firstly, obviously, about that creation of an immutable record of trust. And on that immutable record of trust, the chain then allows you to build upon that foundation of trust as you start to overlay incremental transactions. And so for something like EHR Data, they're looking at writing medical prescription records for opioid prescriptions in North America to the chain. and that's to try and combat the opioid fraud that exists in the medical system. So this is a significant use case for the adoption of blockchain and really using its immutable record keeping, its transaction processing capability, but ultimately building trust within a value system. Unisot is a partner that we work with on supply chain analytics, and ultimately they've built out an IoT-based platform for the global shipping infrastructure market. And so they're ultimately taking from origin to destination through the lens of Internet of Things sensors, and they're bringing that onto the blockchain network as new transactions. TDXP is a fantastic innovator in the swaps and futures market. They're an OTC and swaps business, and they're offering their clients very strong innovation around using what is referred to as atomic token capability, the immediate registration of converting, a BTC to a US dollar or swapping in between two different instruments. And they're using the blockchain and its record keeping capability at an atomic level to allow very fast transactions in the swaps market. And a super interesting gaming business, Fix, their first big flagship game is something called Crypto Fights. They're a play to earn gaming company, and they're really pushing us hard on the volume of transactions that they're putting into the blockchain on a daily basis. They're now touching 5 million transactions per day, which surpasses every other blockchain that is actually in the market. So whilst they're focused on 4, of course, blockchain in its real utility form is available for many markets, and we work across a number of really cool spaces. We've seen certainly in 2021 late and into 2022, the media industry really paying attention to NFTs, beginning to put artist rights, copyright, master files onto the blockchain, where you want that immutable ownership record, the original identity that I own the copyright. These are my rights. And so we're seeing a lot go on now with NFTs being overlaid on copyright and using the chain then to build a transaction processing engine for next generation media and video distribution. So of course, the modern world is all about getting to developers. Within every major enterprise, there's a senior architect, a data scientist, a senior developer, and coders, and these people are the modern builders. And this ecosystem has to be available for those builders to work with the executives and the decision makers to figure out how do they bring blockchain into their environment. And we're part of a bigger ecosystem. And through that ecosystem, there's a lot of innovation across a number of areas of the whole vertical stack of what blockchain is capable of. So I've given you a short summary of TAAL. We're 2 businesses, an infrastructure service company, a mining operator, but we're building that mining not only to bring subsidy income in the short term, but fundamentally to be a transaction processor and a services company, bringing the power and the utility of the BSV network to enterprises, large and small. Thank you, Rob.
Great. Operator, we're going to move to the Q&A session now, if that's good. Richard, one of my first questions that came in was discussing, you mentioned Kazakhstan and some of the Eastern European countries. It would be, I guess the person is asking to summarize, do you have any remaining exposure to the Eastern European countries, or that's, I think, the point he was trying to get towards?
Yes, we do, Rob. We have a percentage of our fleet in Siberia, and we have declared that we've had operations there over the last couple of years. And in part of our growth strategy, we've moved a lot of our machines into North America, and everything that we invest in now is in either the US or in Canada. And so we will diminish our exposure to those territories. And that's a combination of, obviously, ESG mandates, as well as geopolitical issues.
It would appear to me, too, also, you were planning this all along before world events with the acquisition of the New Brunswick facility, cleaner energy, et cetera, et cetera. The costs obviously outweigh are better than any other facility that I'm aware of. When you think about the green initiative and the whole debate internationally around fossil fuels, et cetera, it would appear that most of the competitive landscape is at a significant disadvantage. How would you quantify your lead as it relates to just the cost side of the equation? Maybe not just the processing, but they're tied together. But what percentage, or is there a way to quantify your lead, would you say, against some of these other competitive chains?
Most definitely. I think without over confusing the listeners and the audience, I think we are in a very, very distorted period for the blockchain crypto market. And what I mean by that is, the original Bitcoin protocol and the white paper and its incarnation as a technology fundamentally came to market to promise one thing. It was to build a utility that would enable digital cash token-based systems. And of course, digital cash in a token form can transform many markets, from central banking through to commodity trading, through to the way an electric car is going to charge and automatically pay for itself in the future. And so firstly, I think when you start to really get your head around the trillions of transactions that are actually going to flow across blockchain networks in the foreseeable future, and I'm talking in the next 3 to 7 to 10 years, what we've got at the moment with a lot of the networks that have come to market as layer 2 networks or layer 3 networks, or these side chains, these are ultimately propositions that just do not scale, and they never, ever deliver on the economic promise and the utility that is really fundamentally required for the volume that's ahead. And so I think it's important that we tackle some of these topics. So our core benefit is, of course, that we're building on the original Bitcoin protocol. Yep. And that was all about unbounded scale in block size that just keeps delivering efficiency for transaction processing. So as there's more of that volume of transactions, and as those transactions get bigger, the unit economics continues to improve. And I think that is the core value proposition of what TAAL does on the Bitcoin network.
That's great. It's very helpful, Richard. When you're looking at the scalability, the ability to be so much further out in front of your competitors as it relates to the technological advantage. I mean, most people don't understand what the OSI stack looks like from layer 1 through 7, et cetera.
Yeah.
And if for geeks and people like yourself and myself who've been in the industry, we understand those concepts and how powerful it is, because you can't change it. It is what it is. So you better able to adapt or die. And it seems to me that TAAL has a big lead in terms of tokenization. Wanted to see if you could flush out the STAS portion of the acquisition from approximately a year ago.
Yeah, you've opened up some great topics there, Rob, and I will avoid going into too much of the OSI layer. But I think maybe just starting there for a second, maybe for a few of us that are old enough, I think one thing that I think is important to recognize is that what is going on right now is very similar to what happened in the late 90s with a technology shift that created IP networks. And, in late 80s into the 90s, we saw the dominant data networks were things like frame relay networks and token ring networks. And this young company, Cisco Systems, got going and brought to market the concept of IP networking. And a little battle played out for 4 to 5 years in the late 80s, early 90s. And I was sitting back then on the frame relay side, and we saw ultimately standards get created, and we saw the protocol begin to start to offer a different promise of how networks would function. And Cisco, in a number of the industry standards, did a great job of bringing TCP/IP and IP networking to market. And actually, at its heart, the Bitcoin protocol is that. It's a layer 4 part of the technology stack. It is a fundamental protocol for networking. And what does it do? Well, it brings economic value to networks. And I think in many occasions we miss the importance of that protocol. And I am delighted to say I'm seeing some great movement in some of those industry bodies, where those industry bodies are waking up and understanding the promise of the Bitcoin protocol as an extension to some of those IP protocols, IPv6 in particular, and what's going on in kind of 5G and IoT networks. So it's an important point.
Yes.
But yeah, I think what is the Bitcoin protocol? Well, it's a native protocol. It functions a lot like TCP/IP. And when we look at something like the STAS token protocol, that is also a native token protocol. And so what that means ultimately is it's tapping into some of the underlying Bitcoin functions that allow the token to function very efficiently, very fast in any given tokenized market. So whether that's an NFT or whether you're actually digitizing treasury and building a central bank currency, you know, that native protocol has a lot of rich functions that function natively. And I say natively deliberately to try and differentiate again against what Ethereum, Cardano, you know, the other layer 2, layer 3 networks are building. They're not native protocols when you come to token. And so any side chain, and we've seen it unfortunately this week with the Axie Infinity hack, you know, there's a side chain that is sitting on top of the Ethereum core chain. And anytime there's a side chain, it's a vulnerability. It's going to create an opportunity for a security flaw, and it has. And so, you know, this protocol is a native protocol. And I know that's quite technical, but it's a really important distinction.
No, absolutely. And, you know, as I can say, as the former worldwide head of internal audit for Cargill, the largest privately held company in the world, when you're not native, there's always vulnerabilities. And
yes,
when you can get root access at the OSI layers, then the hacker is free reign. So I speak from experience, and I know the point you're trying to make. One thing I wanted to go back from a fundamental point of view that I'm not sure investors are really grasping, but hopefully we can flush out here, is prepaid deposits. So I think people are thinking you're prepaying for expenses, and these are like operating expenses, et cetera, et cetera. But these are really true operating expense investments you're making. And want to talk to what kind of return, or how should investors be looking at that number as it oscillates either up or down?
Yeah, so I think maybe simplifying things, you know, at the end of the day, we're a company that is, you know, trying to acquire data centers and build data centers. And we plan to populate those data centers effectively with these ASIC mining machines that ultimately run the hashing algorithms. And there is significant demand presently for those ASIC mining machines, and there are limited vendors. So one of the challenges there is that you have to make prepayments to secure yourself in the supply chain firstly. And so as again, Rob, you probably know, you know, when you're deploying a fleet of hashing power, the life cycle of that machine is about 5 years. And there's a lot of engineering work going on to bring in different cooling methods and try and extend that life a little bit. But, you know, on average, it's gone up from 3.5 to now roughly about 5 years. And so you do have to think about the life cycle of this industry. And so for us, any new capital investment we're making into hardware like that, then we will have a churn of anything we put on the ground this month. In 5 years from now, we will be looking to replace it. And so part of that is ultimately thinking through the role of equipment financing and bringing debt in to help you ultimately manage the life cycle of that hardware in the different data centers that you're building. And so in certain cases, we're making prepayments that are ultimately funding that CapEx as part of thinking through the life cycle. But to investors, I think where we're unique is where you're putting that ASIC in the data center, switching it on, and ultimately solving a block puzzle every 10 minutes, solving that block puzzle for the reward of a BTC coin at 6.25 per block at the moment, going to 3.125 in May 2024, and going down to 125 in 2028, it's a diminishing return to stay looking at that fleet of ASICs just through the lens of the subsidy reward. If you're not overlaying now a transaction and services economy business that drives greater return on that utility, then, I think the core use case for blockchain mining, certainly by 27, 28, is coming under significant question. And so we're using a combination of those leaders to think about efficient capital, not use our working capital to finance the machines. We're managing prepayments as part of that CapEx commitment, but ultimately we're thinking on a life cycle. But this is the next generation cloud computing business. We've got to think at scale for this. We intend to be a very sizable operator over the next 10 years, dealing with these trillions of transactions a day. And so the infrastructure matters, and thinking through the financing of that is a big part of it.
Absolutely. Richard, when you're looking at having the fact that you're in 2021 already generating fees that are above the subsidy rewards, and everything you're doing from an infrastructure point of view, from adding processing power, lifting the ceiling to 4 gig, et cetera, would appear that as you not even going to have for 2 more years yet, likely 2 years out are above and more than offsetting that loss in subsidy reward. It would appear you're well on track to eclipse, any diminishing due to the halving concepts. One, is that correct? And then 2, it would appear after the processing is done, per the question here, margins, colorful language here, go through the roof.
Absolutely, Rob. And not enough people ask that question. So thank you for asking that question. But yes, we've been building for the last couple of years the software services business to really start to get on top of that transaction processing. And it's going really well. And yeah, we want to be in a position where we have well offset the loss of subsidy income in 2024. And more than that, actually, this is about being a transaction processor software services company, well into the future. And again, maybe an opportunity here just to talk about, again, the micropayments market on blockchain that, again, doesn't get talked about enough, which is we all get very transfixed on the BTC at whatever price it's at, $48,000, $44,000. That's the top level unit, but we have to remember there's 1 million Satoshis is the subcurrency. And when you and I are buying a cup of coffee with Bitcoin SV in 5 years from now, we're not spending the Bitcoin SV, we're spending a Satoshi. And that's, and ultimately it's that Satoshi micropayments economy that we're building for. And that's where the trillions of transactions start to happen. And there's a very large part of our software stack that is geared for how that micropayment system will be working in years to come.
Richard, when I reflect on what you just said, it sounds to me from an operating model, if I was to project to 2028, to project an operating model, it would look a lot more like a Visa MasterCard than a miner. Is that a connotation that fits? That's a good way of thinking about it. We do pay attention to what's going on with Visa and MasterCard and the ecosystems that they operate in. They've all got, in one way, shape, or form, kind of blockchain digital strategies. They're thinking about the evolution of their payment systems. And yes, I think I go back to first principles again, Rob. The Bitcoin protocol was invented to be a digital cash token system. And it is elegant in its design. It is natively elegant. And it is the only protocol that can really natively scale to deliver the micropayments economy that we will really know in the next kind of 5 to 10 years. And I do use the use case. I had the privilege of working with some of the really biggest smart city projects around the world over the last few years. And I witnessed the rollout of large-scale
IoT sensors in big cities, so smart street lights, IoT in road gantry systems, in the tarmac, in buildings. And when we think about this machine-to-machine economy, and these are all transactional sensors, so every time your car passes or your bus passes or your mobile phone goes past one of these sensors, whilst they are data collection devices today dealing with all kinds of city operations, the road gantry and the smart streetlights become part of the payment infrastructure. We will be paying for services. So as my electric vehicle or my autonomous vehicle, more importantly, is driving around those streets in the next few years, the car will be paying for itself, for its utility, for how it uses the road. And that will be part of that micropayment ecosystem.
Yeah, it's definitely exciting. And I think the use cases, as you mentioned, are unbounded, really. There really is no limit at this point. With that, Richard, I think it's a great place to wrap it up. I want to thank you again for your time today. And I want to remind everyone that TAAL is available for one-on-one meetings later this week. If you've not already signed up, please send me an email at Breza, B-R-E-Z-A, at Lytham, L-Y-T-H-A-M, partners.com. Click on the one-on-one meeting request button, or you can go to lythampartners.com/virtual and also click on the one-on-one meeting request button. With that said, I want to say thank you again, Richard. Everybody, enjoy the conference.
Thank you, Rob. Pleasure being with you.
Thank you.